Unbelievable. I talked about Open, and then essentially in the crashing market is the only stock literally which is up, and not 1%, it's 6% up since we talked about it yesterday. And we will dive in what is now the biggest factors to go 10x and more here in this video.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that can go 10x, 20x. And I did this with Tesla. My subscribers bought houses and apartments, so it should be worth to subscribe to my channel. And I also never advertise anything else except my own software company, xtendaytrading.com, where we trade for you. We do all the trades all automatically in your portfolio. Only what you need to do just to switch on the software. The money stays always in your account and we just send you the trading signals. We haven't lost a trade in now 2.5, almost 3 weeks. It's incredible because we are a team of professional day traders and send you the trades directly to your portfolio. So if you're interested into that, make sure to schedule a call with me. You could be like one of my members here, Yaron, who texted me yesterday. I woke up to this message that he made yesterday, $7,000. He's trading 2 accounts with us. So if this is interesting, then guys, just, don't hold it. Just invest the 15 minutes because we want to make about like 2 to 4% per week. Every week, doesn't matter if the market goes up or down. And then this compounds obviously to like 8 to 15% per month. So that can give you on the minimum $10,000 a huge growth over the next couple of 12 months. Now, let's talk about Opendoor, okay? I believe that one of the most underestimated things that is very positive for Opendoor is the lower rates, okay? If the rates are lower, people buy more houses, right? So more activity for Opendoor. So I think that people underestimate the Fed because the new Fed chair said 2 things. He said that the quantitative easing, so the liquidity to the market should go a little bit lower. The balance sheet of the Fed should be removed a little bit, which then caused a little bit of, turmoil on the markets. Obviously, then Microsoft earnings were not so great, so everything went down. But he said also that he wants to lower the rates, which is good for Opendoor, maybe the most important for Opendoor. When you want to buy a home, when the rates were high for a couple of years since COVID, and then they come down, and now you say like, now I'm buying something, right? So I go to Opendoor and I go through all the process and I get myself a home. And I feel that there's one clip that I will show you from the CEO of Opendoor that is very, very important. Have a look.
I think it got to the point where in one of the markets, I think it was Charlotte, if I remember correctly, almost 10% of homes in Charlotte that were under a certain price, call it like $600,000 homes, which actually buys you a lot of houses in Charlotte, 10% of the homes were bought by Opendoor. So now imagine that I want to go buy a house in Charlotte. I can go to the multiple listing service, the MLS, which is, you see that on Zillow, Redfin, all of these other sites they just mirror the MLS. But that's only going to show me 90% of homes for sale. The other 10% are only on this thing called opendoor.com. So you don't have to get 100% of the homes in order to get 100% of the users. You get 10% of the homes. You get 5%. It's kind of like the Laffer curve. You can't exactly define what it is, but there's some quantum, and I would call it 10%, where if you get 10% of all of the supply, you get 100% of the demand. And once you have 100% of the demand, now you could break this like horrible monopoly. And I did this whole video on it, which I know I said to you, this horrible monopoly of real estate agentdom. And you could say, you can list your house on opendoor.com and we'll charge 1%. And if you pull that off, it's the biggest market in the world. And that's what made me so excited, because eBay is a marketplace for everything except for homes. And it's a $45 billion company. There aren't actually big companies in residential real estate. It's kind of strange. Like the biggest ones are CoStar and Zillow. There's no $100 billion plus company in residential real estate, which is kind of bonkers because it's a bigger asset class than like everything sold on eBay.
And so why is that?
Why is that? Because it's so hard to aggregate the supply and the demand. And what Zillow and others do is they just do lead generation. It's a terrible business model from a consumer perspective. Like it should have like negative 100 NPS because you're just getting called all day by real estate agents. You're not actually improving the value proposition. And Opendoor, it's not about flipping homes. I mean, maybe it is. You run the company. It's about how do you build a marketplace, the biggest marketplace in the world. I mean, to give you a sense of how crazy this is, there's a company called Copart, public company. You know what they do? It is auctions for like not used cars, but for like totaled cars. So if you get into a car accident and State Farm's like, oh, that's a total loss. What do they do with the car? They sell it on Copart. Copart, I think it has like a $70 billion market cap.
Who buys it?
Who buys it? Like people in Russia. Well, no Russia anymore, but like all sorts of like, I buy it for parts or I'm going to go fix it up. But Copart is a bigger company than Zillow. But how is that possible? It is just because nobody's tackled this. It's the biggest market in the world, but you have to build hopefully a capital light marketplace.
I think it's actually I think Opendoor is deeply misunderstood as a company. Like, I think you have to think about companies as like category problems are real in public market investing. Like, I remember like when I first joined Shopify in 2019, I think it was like among the highest, most shorted stocks on Wall Street because people made a category mistake about Shopify. They're like, well, it's another e-commerce company. Like, what are the odds it will build all the warehouses? That's gonna that's its category mistake. Shopify does e-commerce, not e-commerce company. Like, just the leverage point for Shopify does not come from e-commerce. It obviously comes from software. It's very much just like a software. I think that's actually a problem that Opendoor has had, is that like externally and admittedly for some time internally, the company thought of itself as essentially an investor in real estate as an asset class, which is not the job of the company. Like, this is not what the company does. It's a software company designed to solve that problem. And I think if you attack it like that, you just fundamentally do different things, right? Yeah. Like, if you look at, it's a publicly traded company, you can actually look at the numbers. The company has repeatedly been buying fewer and fewer homes every year, right? Because they're like, if you're cool, I'm going to buy an asset class. You only buy homes that are mispriced. But turns out not that much in the world is mispriced for a very long time.
Yeah.
Right? And that just becomes it may become a good business, just won't become a big business. And that's I think a fundamental mistake the company has made in the past few years.
So as you can see, it's more about, he worked with Shopify and they had the same problem, right? They were like underestimated, like what software can do to a marketplace, very, capital intensive with the warehouses, online shops and so on. But in the end, Shopify became one of the greatest success stories. And I feel that the new CEO, Cass, can really do some magic here. He is like this very hardworking individual. And also the chart for Open, as I told you yesterday, looks phenomenal, right? So with that said, check out a little bit of Open and let me know if you own already some Open or just open a position, because I think that we can see very interesting levels for Open very, very soon.